Good morning all, CamelbackTrading.org coming to you this Monday morning, January 24th, and we are looking at Window Traders Market Profile of SPY IWM and Triple Qs. And after last week where the SPY was down just about $27, we are continuing to sell on this morning as all of these indices continue to head to those levels that we spoke about. Triple Qs already below theirs, right? 350 was the level. They're 347 and change. The next best big level now is the 328. 330 level. IWM, we talked about that one. 191 the next level. Well, they've gotten below 195 or 196 this morning. And for SPY and ES, SPY next big level is October's low of 426. Right now, all three of these indices with 75 minutes to go might potentially be gapping lower, which would be weekly gaps. Overnight high right now in SPY is 441.90. Overnight low is 434.85. If we gap lower, Friday's low of 437.95 would be an upside destination. I gave a ton of destinations on Friday night. We'll not be going over them. But right now, it looks like they're going to be filling or attempting to fill the gap from October 14th and then making their way downward as there's not a lot between here and that monthly low in October, 426.36. So it can get very interesting. A lot of earnings this week, but more importantly, unless you're trading those individual stocks, the only thing that matters to me is the Fed on Wednesday. I think the big question is, do they start their tightening cycle here in January or wait till March? As far as the game plan, the bigger the gap, the more I'll wait, right? People will be screaming gap rules apply. But if the gap starts becoming $2, $3, I'm not looking to take a short with a gap of that magnitude. The market in the short term is incredibly short, right? We've been one time framing down for 5-6 days now. So the market in the short term is short. We'll see if there's an inventory adjustment. If the gap is $1 or less, I would definitely look to take a put play against that with the lower value. I'd be out if the gap fills. Remember, nothing to lean on from Friday. We were 8 wide, but that's it. There's no afternoon rally high, nothing. We did have a price pro, but it was really small, so I said it's ridiculous to use M's low is just as important as L's low. But if some shorts decide to cover, you can get a pretty good rip up because there's nothing really inside of Friday's range. So keep that in mind as the day progresses at some point. But right now, with a gap of $1 less, I would look to take a short. No real call play here whatsoever. Really nothing to lean on as far as I'm concerned. There's another weekly low down at the 431.50 level. But really, there's nothing until really October's low. So this could get pretty interesting. So I'm sure there's going to be some fluent changes throughout the day as this market has pretty much price vacuums on both sides. So we did over 200 million shares on Friday, the heaviest volume we've done in a long time. We're averaging over 100 million shares so far this year with tremendous ranges. Expect that to continue at least for today. And then on the chart, so I went over all the charts Friday night for all these indices, but here's SPY. The monthly is now down, and we have a possibility of an outside month down if we close below 448.92 a week from today. That all remains to be seen. Here's your next destination, 426.36. Weekly down, next destination, 426.36, right? And on the daily, same thing. Got below the 200 for the first time in over a year, and now the next big destination is 426.36, which is right here, October 4th's low. Good luck trading today. Thanks for the likes and subscribing, and we'll recap at 4 p.m.